everyone.
Morning. Good morning, everybody. Nice to see you in the chat, Terry. How is everybody doing this morning? We got quite a bit going on, don't we, with US CPI just around the corner here. And we have all this stuff going on with the ECB. Then a ton of commentary out of the BOJ. That's why the yen is moving things this week. So with that all said, let's hop right on into it. Right off the bat, on the NQ for the day, not a whole lot. You can have some more negative drift here into the end of the day, but it'll probably end up flat. Let's go ahead and check out Euro dollar. Hey-yo. Yeah, man. That looks like it freaking topped out here. So either this thing's gonna bottom out right here, right now, by the looks of it, or it's going to swing past these lower probability spots into this peak right here, this area here. And yeah, look at that. You got this tail risk right down here, way, way down there. That's about 70 pips lower. But what would cause that? Well, probably not anything that could happen today. Yeah, probably not anything that could happen today. Let's check out USD yen. Ayo, well, there's your stronger dollar here, recovering after all this stuff with the BOJ came in. And it's kind of in the same situation as euro dollar, where either this thing's either topping out here for the day, like right here, right now, or it's going to go through this spot here with these slightly lower probabilities and into the higher probability zone, right where these peaks are. Looking at this, it seems like we're probably just going to see this have a positive drift up to here on the day and then maybe pull back in the last couple of moments into the end of the day. But like, what is that going to be on the yen pair? It's like 20, 30 pips. It's not that much to ring on about. Yesterday's stream, I took a short trade here on New Zealand dollar. I got out of it earlier and I just was like, this is enough for me. I'm cool getting out here, because I wasn't certain if we were even gonna get anything today that would send the dollar stronger, especially on these New Zealand and Aussie pairs, because there's a bit of complicated fiscal policy stuff going on right now with both of these countries. And I could actually go right on into that. So this is actually a bit of the Bank of Japan talk going on. First, there was some people, I think, out of the Japanese government talking about how the yen was way, way too weak. And now you have Ueda coming out and saying, hey, we would like to get rid of our monetary policy. I mean, they've been saying this for a while. But man, look at those JPY 10-year yields. Those 10-year yields are finally actually doing something. They've rallied here to new highs, and they're only about 30 basis points. They're 0.3% off from the new 1% limit here. This thing caps off at 1%. And at that point, the Bank of Japan has to step in. Yeah. So that's what's going on with the Bank of Japan. We're going to keep an eye on this for sure, because yen strength could really move stuff around. Also, I'm going to put this on the right-hand side so all the people who need something to watch can just look at some price movement going up and down. Okay, so ECB. That is what's on the docket here in about 48 hours. The ING crib sheet's out, and their base case is for a hike. Again, it's really split 50-50 depending on who you ask. It's really 50-50 on who is expecting a hike and who's expecting a cut. It's a coin flip. It's effectively a coin flip. However, one of the things that's central in a lot of these outlooks, when you read through them, is they all have this agreement that, the dollar should probably get weak on this US CPI move that's coming. Okay, so it gets weak on there, and then there's about another 24 hours till ECB comes out, and that could go either way. So man, if you get a a 60 basis point, a 0.6% headline month over month figure for US CPI, and then you also get the 25 basis point rate hike out of the ECB. Man, a 108 euro. You know what it's going to look like? Here, I'll hide the research. It's going to look like this all over again. Back here. It's going to look like this period in time all over again. Because this was all central bank stuff. I think this was FOMC, right? I was very adamant over here, like, oh, the Fed should have hiked here. Man. They, looking back, yeah, they probably should have hiked, because look how, dude, just look how crazy that's been. That has been a crazy, crazy sell-off. So no matter, even though the FOMC started to pause and the ECB continued hiking and continued tightening their monetary policy, it was still not enough to prevent the market from continuing to price in the relative economic slowdown in Europe accelerating relative to the United States. This is where understanding the concept of growth inflation matrices can come in handy to at least generalize the macro regime. So in my head, I'm still looking at this peak here around the 105, the latter upper half of the 105 area. This peak here in the monthly low distribution using range probabilities. And if you want to try out this indicator for 10 days for free, join the trading group. Just check out the link in the WAP chat here in the description. So back over to the research, and I'll go ahead and pull up NQ and pull it up, let's say, on a 3-hour. There we go. And then pull up that research. Alrighty. So let's see here. Oh yeah, there was a particular bit of information that I found unique in my research this morning that I have not seen a single outlook discuss. Like in the last several months, I have not seen this brought up. But I was looking around the prediction markets to see if I could find any prediction markets that were also pricing in the ECB rate decision to see what not just institutions were expecting, which is the 60-40 split for no hike, a pause on the 60, and hike on the 40% probability. I wanted to see what effectively gamblers were expecting. And you know what? As I was looking through the prediction markets, I found something called the Union Alert here from GJ Open. This out. This is what the market is called. When will the Council of the European Union declare a, quote, Union Alert, triggering a mandatory EU-wide reduction in natural gas consumption? And I'm like, oh, you know, that's probably something that happened in Q4 of 2022. Or, you know, when all the stuff with the Russia-Ukraine war started, right? This is an old market. This is an outdated, closed market. No, it started like 2 weeks ago or 3 weeks ago, back at the end of August. So I'm like, oh, this is new information? So check this out. Amid the loss of nearly all natural gas exports from Russia and the coming of an El Nino winter, the Council of the European Union extended a regulatory setting a voluntary natural gas consumption cut of 15% that could become mandatory upon the declaration of a, quote, Union Alert. The question would close upon the date of the official decision being made by the Council. And so I'm like, well, what are the probabilities of this happening? And so this here is the primary set of, this is where most of the market is and where most of the people are expecting. So this is, sometime after April 1st of 2024. So sometime after the middle of like the second quarter of next year, after the first quarter. But now in the last 24 hours and in the last week, the probabilities of this have been going down from 90% to now 87%. It's been going lower and lower as the El Nino probabilities keep getting worse and worse. And now you're seeing droughts in the Mississippi coming in that are going to be increasing freights of all the corn and the soy up in the United States. And then you have those droughts also affecting the Panama Canal, which are going to impact about 40% of all U.S. import-export, or at least consumer goods, 40% of all U.S. consumer goods on the East Coast. Like, that El Nino is going to be a big, big deal in Q4, Q1 of this year. It's going to be a big deal to watch out, actually, for weather forecasts when you're trading. Figuring out how the weather's going to be in like 4 months from now is pertinent to people who are making investment in, prediction market decisions right now. So, it's good to be aware of this, right? The whole point of what I like to do is the more you learn about the world, the easier things can get at trading, the better you can get at trading, the more you learn about the world. Simple as. But check this out. So the probability of this union alert occurring, it bumped up. So the probability that, it's not going to happen until after maybe April 1st of 2024, that went down and that moved into this area here where it effectively is saying it's going to happen in Q1 of 2024. And this here is also saying, a bit of that probability also went to maybe it occurring actually in December. So this is a risk I have not seen anyone talk about. Like, absolutely zero people. Absolutely zero people. And I just came across this by accident because of this market. And I'm like, what? And it's like some obscure law that got passed all that time ago when we were talking about Russia and Ukraine. And there were all these problems with natural gas in Europe. And now that might become a thing again, potentially, this winter. So we'll see. We'll see. I'm going to keep an eye on these probabilities and see, because right now these are just little bumps, right? These could be volatile. This market could be quite volatile, right? So I'm just going to be tracking this over the period ahead and seeing if this number just steadily goes up or if it's going zip, 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 zip. So we'll see and we'll watch it. And then this is the article that they're linking to directly from the European Union. And this goes back to March 28th of 2023. Yeah. Infographic. Gas demand reduction in the EU. Yeah. That's a lot of gas reduction. Yeah. Great infographic. All right. So I just expanded this out and we got loads of outlooks here. FX Daily Brief, China and Japan push back. So a lot of guys were wondering what was actually going on yesterday. Like, why was there all this risk on that occurred over here yesterday? Well, you have Japan pretty much to thank for that. You have, if we go and we pull up USD JPY, and you see this on the right-hand side, this drop here, that was the cause of a lot of the risk on, because of how strong that move was against the US dollar. And that was simply on the word of Ueda back here. Oh, come on, load. It was just simply on the word of Ueda and some other people saying, hey, we're watching FX markets with urgency. So this has got people on the sidelines wondering, oh crap, is the BOJ going to intervene at any point in time? And usually when they give these sort of statements, the answer is usually yes. They are thinking about intervening, or roughly at some time, like within like a week or two, usually, of those statements starting. So this is just a quick little breakdown. Danske Bank is one of the institutions that's expecting I think a rate hike, right? Yep, we maintain our bearish stance on euro-dollar, although the cross could temporarily rally if the ECB delivers a rate hike on Thursday. And then there's one more time, and then they're talking about Norges Bank there. Let's see here. Oh, they actually talk about the Australian LNG strike that's going on. Let's read that. European natural gas prices rose today. Gotcha. Several factors put pressure on the market. It remains to be seen whether the labor dispute in Australia will affect global LNG supplies. Actually, the government in the west of Australia, I got the feed through Financial Juice. The government from Australia that where these LNG facilities actually are physically located, the government there said, we don't expect this to actually hurt Australia's capacity to export LNG. So it seems like there's a bunch of uncertainty in the air about how impactful this LNG strike is going to be on the world LNG supply, especially for Europe. It seems like short term, it's causing a lot of uncertainty. And depending on how long these strikes go on, these fears will definitely get more solidified, because as the strike goes on for longer and longer, you can anticipate that these strikes will certainly keep on going and reduce that LNG supply further and further, and then bring down more and more forecasts and raise the price of LNG more and more. And if the price of LNG keeps going up and up and up, it's gonna put pressure on inflation in Europe especially. Which is one reason why some people are saying maybe the ECB will hike to kind of hedge out their bet, because they don't know what is going to happen with this strike, and the oil prices are going to come back down. So that's why a lot of people, when you read through the analysis of why some people are hawkish for the ECB meeting, expecting a rate hike, it's mostly because of the energy expectations. Oh yeah, you know, one of the things I forgot to turn on the music. There you go. Hey, there we go. We got the music back. Let me know who's still here. We're about 25 minutes into the stream, and we pretty much got a lot of our trading done for the day. And we're getting some exceptionally good research done, actually. This is actually really good. Finally, oil prices are creeping higher. The level of natural gas pricing should not be a big worry for the Eurozone economy or the euro right now. But if prices continue higher, it will likely be negative for both. It's kind of common sense when you start going through these outlooks and learning why these people have these expectations, and then it's like, oh, yeah, of course, when When A and B happens, you get C. This is another outlook by MUFG. And look at that. China and Japan trigger correction lower for the dollar. It's almost like these guys know what they're doing. So let's see here. Okay, check this out. With the new yield curve control cap, they're talking about the Bank of Japan here, set at 1%. There is room for the BOJ to allow long-term yields to keep adjusting higher in an attempt to provide more support for the yen as well. The developments add to comments last week from Japan's top currency official that have raised the risk of intervention to the highest level. There you go. This is why I like the MUFG. They just spell it out for you. The latest developments clearly signal that Japanese officials are significantly concerned by yen weakness and should at least help to slow the pace of further yen weakness in the near term. Although we are not yet convinced that fundamental support a sustained rebound for the yen from deeply undervalued levels. And then they talk about the yuan here, which I'm just going to skip over. And then they talk about emerging markets. So Terry, yeah, if you're looking at this and you're from South Africa, check that out. I think, let's see here. Do they talk about Rand here? No, they don't talk about Rand. Oh no, there's the ZAR right there. They talk about ZAR there. Chile, hey Ari, nice to see you. National Bank of Poland did, I think it was a surprise cut. Yeah, they did a big cut and killed that carry trade, I think. Yeah, and that's that. And all the outlooks that I'm going over here at the speed of light are in the Discord, and the link to that Discord's in the description. You can find them in the outlooks channel. So envisioning conditions once BOJ removes the 10-year JGB target. I mean, we'll just check out these key points here. Yeah, this is definitely going to be something that I need to sit through and read more carefully. I'm not going to be doing this one on the stream. Oh, and then here's BlackRock's outlook. Look at the people writing this stuff. The head of BlackRock Investment Institute, global chief investment strategist, deputy head of BlackRock Investment, macro researcher for BlackRock Investment. Like, would you rather listen to what BlackRock has to say about the future of an economy than, you know, some guy drawing little lines on the chart? Oh man, it's sloping up. Yes, it's sloping up. Buy it while I fade you. Anyway, let's just check out these bullet points. New regime fuels narrative flip-flops. And that kind of ties into the title of this stream, Economic Uncertainty Abound. Narrative flip-flops. I mean, there's been a handful of guys who've straight up asked me what the hell is going on. Why is the dollar getting so weak here right off the bat? And even at first I was confused because I didn't even think that the yen would cause that big of a move. But no, you know, after staying on top of stuff and reading the latest information, no, that's what caused the dollar weakness and caused the risk on in so many assets. But now we're going to be seeing throughout the rest of this week more idiosyncratic risks come along. And unless the ECB just doesn't hike, maybe then in some assets the dollar gets particularly stronger going into the end of the week. We'll have to see, because the expectations people have for how the rest of this week is going to play out is mostly formed by their view on the dollar. If you get your view on the dollar right in most cases, you'll be able to figure out where a lot of assets are tending to go. And you can ask any professional, you can ask anyone who's been trading for a long, long time. Like, does understanding how the dollar moves help you with your trading decisions on any given asset? And the answer is yes. It helps you with gold, it helps you with oil, it helps you with all the commodities, it helps you with all the currencies, it helps you with pretty much most major equities, especially in Europe and the United States, considering a lot of the largest equity companies are international. So they have some business in the US and they have to have dollars on hand. So yeah, dollar, they got their finger in everything. But yeah, check out what they have to say. Check out what BlackRock has to say here on US CPI. US CPI data this week should show more post-pandemic normalization. We see inflation on a roller coaster ride ahead as an aging population starts to bite. Oh yeah, I watched a video actually, I think from this guy here on the BlackRock website, talking about how they're starting to look more seriously into the aging population stuff, into how are they going to position their company as the risk of an aging population of all the baby boomers in the United States, as that theme actually starts to realize itself. Because you can talk about the aging population in Japan all you want, and the low birth rates all you want in the Western world, but there's also still the elderly problem. There's still a lot of elderly people who are going to need help, and there's probably not going to be enough people to help take care of them. Which is why when you look at people in the United States and in Europe who are trying to get degrees, one of the fastest growing fields for new people going into college is healthcare. Healthcare is one of the fastest growing sections in pretty much every single school, outside of I think to an extent computer programming and business and marketing. Like it's really high up there, healthcare now. But yeah, this would be a good one to check out. The link to this one's also in the Outlook's channel if you want the official link from BlackRock on this. Yeah. Let's see here. If I search for population, it shows up 8 times here. However, we get there. So how has weak growth done under the radar? Huh. Gone under the... Oh. So they see weaker growth way ahead. So going into the latter half of the 2020s, they're probably gonna start penciling in much weaker global GDP growth. But hey, that might make India especially attractive in the latter half of 2020. That might make India an especially hot place to invest in the latter half of 2020 if this is the case. Oh yeah. We also have some more stuff out of... Actually, you know what? Let me go ahead and just switch on over. I alluded to this earlier, that there was some fiscal policy stuff going on in New Zealand and Australia. And this is what I mean. They had this thing called the pre-FU. The pre-election economic and fiscal update. And this is the general summary. It's effectively the fiscal stance of some Australian stuff, some New Zealand stuff. It's broadly around New Zealand. But every single person under the sun who does outlooks on Australia and New Zealand. They've been coming out of the woodwork today, giving summaries on this fiscal policy. I'm not going to go over this on the stream. This is a bit over even my head, but I'm going to read these outlooks. And look, this one's 16 pages. This one's 11 pages. That one's 4 pages. That one looks like it's 4 pages as well. So some of these are shorter. Some of these are longer. But I'm going to educate myself, and I'm going to learn more about the world and, frankly, how Australia and New Zealand, how they set up their fiscal policy and how they interact with each other on an economic level. And then I'll have somewhat better expectations of what to expect depending on what the government does next. How do you get so good with all this economics information? Did you do it? No, I didn't do a degree at all. No. I mean, the truth is that you can... It's about information access. It's not about whether or not you have a degree or not in this, Lewis. It's literally all about, will you read this information? Will you actually read through this stuff and see how it actually impacts people? It's not about, oh, you know, are you accredited to read about some fiscal policy stuff? Like, no, that's not how it works. I mean, I'm sure, like, there are guys who have economics degrees, and they scoff. They just scoff at reading this. But you know who the people who write this stuff are? They're some of the smartest people in the world. They are. They're some of the smartest people in the world, and they write this stuff for free, and they wished more people read their commentary because of just, in all seriousness, how well informed some of these people are. And it's free. I mean, this is the front. This is literally on Westpac's website. Here, it's written by these two people, Kelly and Nathan. Oh, I know who Kelly is. This guy does the New Zealand weekly outlooks. This guy writes and presents the New Zealand weekly outlooks for Westpac. Yeah, check this out. He previously worked at the IMF on monetary policy, foreign exchange, and financial stability from 2011. And then previously worked at the Reserve Bank of New Zealand. This across senior roles for the financial markets, economics, and like this guy isn't writing like super high jargon stuff. Even though he's literally like top of the food chain when it comes down to who you could listen to as far as economic analysis goes. Like, everything is just right there in front of you. And if you want to learn more about what's going on, well, there's like 4 other people. There's like dozens and dozens of other people you can read from who write it in 5 or 6 different ways that you can learn from. So there's no lack of information out there to learn more about the world. It's literally, will you just do it? Will you just do it? Now, there's also the other argument of how useful is this stuff in trading? And that's always, oh man, it's like the one thing that always just people try to throw a wrench in the conversation. Oh, how is this stuff actually useful for trading? Yeah, no duh. It absolutely is. Look, if pensions and billions of dollars in investment are being dictated by the government telling your business how you can and cannot invest, learning what the incentives from the government are and what they're trying to achieve on a geopolitical scale for the nation and what kind of economic achievements they want to reach is an important thing to understand. And then under that framework, you learn about how those businesses are operating and how they're going to work inside that framework. So you got to learn a lot about the world, don't get me wrong. And that is kind of the quote-unquote hard part about, you know, actually getting knowledgeable about the world. Does it necessarily help you with trading every single day? No. It won't help you every single day. But if you're, let's say you have financial juice open and some information about the New Zealand government comes down the squawk talking actually about this, and they have some major change to this pre-FU, right? This thing, whatever it is. They come up with some major radical change that impacts how much money the government is spending. Well, I don't know if you remember from your Economics 1 class, but government spending, how much they decide to spend or not to spend, impacts their GDP directly. So understanding maybe what the purpose of that extra spending is, what sort of political regime came in and got elected to pull back some of that funding. I mean, did you know that the right-wing party, the Nationalists, I think, party in New Zealand is currently leading and gaining? It's becoming one of the most, if not, it's kind of like what's going on in Germany with the ADF, or what is it, the AFD, I'm dyslexic. What's going on in Germany is very similar to what's going on politically in New Zealand. So when those guys, if they get elected and come into power, they already said, oh, we're going to try and pull back all this government spending. Well, they might not have the opportunity to pull it back if the country goes into recession with the rest of the world into 2024, right? So there's going to be some more geopolitical volatility going on in New Zealand if those guys get elected, and there's going to be a whole lot of fighting over what kind of money gets spent. And then that increases the risk of less government spending getting spent because they can't agree on anything. Kind of like what's going on in the United States with the upcoming debt ceiling bill. They have to vote sometime by the end of September and come to an agreement. McConnell and no, I forget exactly who it is. Whoever is taking the charge on that, as far as the GOP and the DNC go, whoever's leading those charges. But all I know right now is that right now, as far as the U.S. goes on the U.S. debt ceiling limit, they have to come to an agreement sometime here in September and have it accepted and ready to go by October 1st. Otherwise, they risk having government shutdowns again in the United States. That kind of political strife could increase in New Zealand. And you would only know those kinds of things if you were in the Plan the Profit server looking at these outlooks and like following the Roy Morgan weekly analysis videos. Like Roy Morgan is a great resource that I post all the time in that Outlooks channel. Let me see if I can find it. Let's see, it's under probably macro to micro. Let's see, Roy, oh no, it's under geopolitics. Yeah, there it is.
Welcome to the Roy Morgan Weekly Update.
This.
Even after
this thing, Roy Morgan. I never got this lady's name. I don't think her name's ever presented. But I've been watching this presentation now constantly, and it keeps me updated on the politics. It keeps me updated on all sorts of economic information going on. And then there's like a half a dozen channels and outlooks that are exactly like this that I just share, and I hope it makes it easier to get access to this information so then more people can just learn more about what's going on in the world. So then whatever decisions that they decide to make, they can at least have the information at their fingertips to help them come to more educated conclusions. But this stuff really can get very, very, very important in trading. Like, understanding just how the world works is far more important and can align your views more accurately with reality and future trading expectations than, frankly, using TA or just guessing, oh, what's the forecast of some economic event? Like, understanding, oh, even though this economic event turns out really, really good, it doesn't change the fact that all these other factors are still really poor and the future expectations are still really bad. So maybe we continue going up and I position for an up move in some asset over the next few days ahead while this rally occurs, and then I go ahead and I fade it later, sometime in the following week. Like, knowing that not everything has to occur exactly at once is kind of a key thing. Knowing when, okay, there's some great economic data coming out of the United States, I might want to stay more bullish on my expectations for the United States. And then for that week, the United States dollar gets bullish, or US equities get more bullish. Then as the next week comes out, it has all of these great economic reports on Europe or Australia. Or China comes out with some, gangbusters economic print. Well, that's going to drive even more risk on in other assets. So that might make, a risk move on in USD pairs. It might make a risk on move in the yen pairs. It might even make certain equities go higher, like equities in the Nikkei, right? In Japan, Japanese equities. And then if China is doing especially well, that might be even more bullish for energy and oil. And imagine what the ramifications of a more bullish China would be right now on top of an already elevated oil and an energy and natural gas price. Like, it would really, really send, like, you want to see oil 110, just get China back on its feet with all these cuts out of the Saudis and the Russians. Crazy, crazy stuff. But, there's more immediate things, because that's all theoretical right there, but there's some more immediate catalysts up ahead, like the UAW strike. That strike's happening this Thursday. The UAW, the United Auto Workers Union, is striking against the 3 largest auto manufacturers in the world. Well, that is in the United States. That is GM, Ford, and Stellantis. This Thursday, the strike is happening. It's like, 150, 200,000 or something? Skilled auto workers are going on strike. And apparently they did a deal with Stellantis. They got considerably good terms with Stellantis. And look at what's happened with Stellantis. Look at that. So apparently they've come to some kind of agreement with Stellantis, and you can see that, like, this is why it's important to learn about what's going on in the world. Just shit like this happens, right? Shit like this happens. And then Chevron, all this stuff about Australian LNG. Well, all of those LNG producing facilities are owned by Chevron. Those are Chevron LNG facilities. And look at what's happened today. Like, geez. Like, this was the beginning of the month here. And then you can see strike risk, low volatility, strike risk, low volatility, and then the strike happens, and now Chevron's actually taken a little bit of a hit here. And now it's a matter of, does this now see a negative drift lower? How significant does it get? What are what's the current state of negotiations going on right now? So just staying up to date on this stuff is incredibly important for not just these equities, not just these companies, but for the countries that they provide goods and services to. Alrighty. I mean, I've gone on my rants, and I certainly hope that it was entertaining and informative. And hopefully you enjoyed me putting on the music halfway on through the stream. The music can be quite nice for a lot of you. A lot of you guys seem to like the music. So I'll go ahead and say, hey, if you guys want to hang out with me post stream in the Plan the Profit Discord, I'll be hanging out in there. If you want to get access to these indicators, go ahead and start a 10-day trial. For the trading group and these indicators, go to the WAP link down in the description. So thank you guys very much for watching. I appreciate you guys joining me every morning for these streams. And I'll see you guys in a bit.